Have you noticed how expensive gold has become lately? If you are planning to buy gold for weddings, festival or as an investment, you are probably experiencing sticker shock. In 2025, gold prices have skyrocketed to over 1,20,000 per 10 grams. That's nearly 70% increase compared to 5 years ago. So what's really driving the massive surge of gold prices? Is it going to keep rising? And what does it mean for your wallet? Stay tuned because in today's video we are breaking down the real reason why gold rates are increasing in India. Before we dive into the reasons, let's just look how dramatic the price rise has been. Back in 2020, gold was trading at around 48,000 per 10 grams. Fast forward to 2025 and we are seeing prices above 1,20,000. That's more than double in just 5 years. In fact, gold hit 48 all-time highs in 2025, which is absolutely unprecedented. The price jumped thousands of rupees overnight. But here's what really interesting. This isn't just happening in India. Gold prices are surging globally. However, Indian buyers are feeling the punch even more. The first major reason is global economic and geopolitical uncertainty. Think about everything what's happening recently. We have had conflicts around the world, tensions in the Middle East, trade wars between major economics and general economics instability in many countries. Whenever there is uncertainty or fear in financial market, what do investors do? They run for safety, and for centuries gold has been the safest haven. When global conflicts heighten investors' anxiety, gold becomes more attractive as traditional safe haven asset. It's like financial insurance. When everything else seems shaky, gold holds its value. Recent geopolitical tensions, recession fear in major economies, and banking sector worries have all contributed to pushing more and more investors towards gold, driving up the demand and consequently prices. Now here's something that hits Indian buyers especially hard: the weakening of Indian rupees. Gold priced internationally in US dollars. India imports approximately 70 to 80% of gold consumption, making it heavily dependent on international markets and import costs. So here's what happens. Let's say international gold prices remain the same, but rupees weakens for 80 to 85 against the dollar. Suddenly the same amount of gold costs you more in rupees, even though the actual global price has not changed. This currency effect has been a major driver for rising gold prices in India. Every time the rupees lost value against the dollar, which has been happening steadily, importing gold becomes more expensive and the cost is passed directly to the customers. Currency fluctuation is one of the most immediate and measurable reasons why gold price is increasing in India, especially when the rupees depreciates. Here's a factor many people don't know about. Central banks around the world are buying gold like never before. China's central bank has purchased 1.24 tons of gold in September alone, while 39.2 tons of gold has been accumulated since November 2024. That's massive institutional buying. And it's not just China. The Reserve Bank of India has also been steadily increasing the gold reserves. When central bank buys large quantities of gold, they are essentially removing it from global market, reducing supply and pushing prices higher. So why are they doing this? Central banks are diversifying away the traditional currencies and reducing their dependency on the US dollar. This institutional demand creates sustained upward pressure on gold prices that affects everyone, from large investors to someone just buying a gold chain. The next reason is inflation, and this is crucial to understand. When inflation rises, the purchasing power of your money decreases. What you could buy for 100 yesterday now costs 110 today. Your savings essentially lose value. Gold, however, tends to maintain its value during inflationary periods. That's why it's called an inflation hedge. When people fear their money will be worth less tomorrow, they convert it to gold to preserve their wealth. Rising inflation erodes purchasing power, promoting investors to seek assets that preserve value, and gold effectively serves this purpose. With global inflation concerns remains high and economic uncertainty continuing, more investors are turning to gold as a protective asset, which naturally drives up demand and prices. Now let's talk about something unique to India. Our culture loves gold. India is one of the world's largest consumer of gold. Every wedding season, every festival, Diwali, Dhanteras, Akshaya Tritiya seems massive gold buying. In April 2025, gold hits 1 lakh per 10 grams ahead of Akshaya Tritiya, an auspicious day for purchasing gold in India. This isn't just about investment. For Indian families, gold represents prosperity, security, and tradition. It's woven into our culture's fabric. Seasonal spikes in demand, especially during festivals like Diwali and Dhanteras and the wedding seasons, significantly impact local prices. What happens when millions of Indians decides to buy gold during the same wedding season or festival period? Simple economics, demand shoot up and so do the prices. The seasonal pattern added another layer to the already rising trend. The next big factor is interest rates and their relationship with gold. Gold doesn't pay interest or dividends like bank deposits or stocks. So when interest rates are high, people prefer keeping money in banks. But when interest rates fall, gold becomes more attractive. The interest rates cut by the US Federal Reserve has triggered a tailwind for gold prices, and it's expected that Fed may further cut rates. Lower interest rate means the opportunity cost of holding gold decreases. Plus, investors seek better returns than lower interest savings account, often turn to gold, especially when stock market seems risky. In 2025, we have seen tremendous investment demand for gold in India. Gold ETFs, digital gold, physical bars, and coins have all seen record inflows as investors look for stability and growth. So what does all this means for an average person? For jewelry buyers, if you are planning to buy gold jewelry for wedding or festival, you are definitely feeling the pinch. Many people are now opting for lighter design or postponing purchases. For investors, if you already own gold, congratulations, your investment has grown significantly. Gold has delivered nearly 60% of return in 2025 alone, make it one of the best performing assets. But if you are thinking buying gold now, the big question is, are we at the peak or will prices continue rising? Higher gold prices affects Indian economy too. Since we import most of our gold, sustained gold prices increase, widen the trade deficit and put pressure on foreign exchange reserve, often weakening the rupees. It's a cycle that fed into itself. Experts predict the gold is likely to remain at elevated levels. Several forecasts suggested continue upward movement through 2026 and beyond, driven by ongoing economic uncertainty, geopolitical tensions, and sustained central bank buying. However, gold prices do experience short-term corrections. There will be dips and fluctuations, but the long-term trend over the past 15 years has been continuously upward. For those looking to invest, many experts recommended this four-balanced approach. First, don't put all your money in gold at one place. Second, consider systematic buying during the price dips. Third, maintain gold as 10 to 15% of your overall portfolio. Fourth, look at options like gold ETFs and sovereign gold bonds for better liquidity. Remember, timing the market perfectly is nearly impossible. Focus on your long-term financial goal rather than trying to catch the absolute lowest price. So there you have it, the 6 major reasons why gold rates are increasing in India. First, global economic and geopolitical uncertainty. Second, weakening Indian rupees against the dollar. Third, heavy central bank purchasing worldwide. Fourth, inflation and the need to preserve wealth. Fifth, strong cultural and seasonal demand in India. Sixth, lowest interest rate and increased investment demand. All these factors combined have created the perfect storm for rising gold prices. While this might be challenging for buyers, it also highlighted why gold has been valued as a reliable asset for thousands of years. Whether you are looking to buy gold for cultural reasons or as an investment, staying informed about these factors can help you make smarter decisions. So what's your take then in gold prices? Are you planning to buy gold or hold off? Let me know in the comments below. And if you found this video helpful, please hit the like button and subscribe the channel for more content on finance, economics and smart money management. And don't forget to share this with anyone who planning to buy gold soon. They will definitely wanted to know about this information. Thanks for watching and I will see you in the next video.